Nobody likes an audit, right? Of course not. So why aren't we doing everything in our power to avoid them? You guys know taxes is what I do, and I've seen enough to give you guys the inside tea on what really triggers these random IRS audits. Are they random, or are we causing these audits? I'm going to give you my 5 top IRS triggers and how you can avoid them. But before we jump in, you know exactly what time it is. I need you to like, comment, and subscribe because you cannot afford to miss out on any of this life-saving information. Now let's get after it. The number one thing that causes an audit is unreported income. You guys cannot outslick the government. Stop trying. Do not have unreported income on your tax return. And when I say unreported income, I want to make sure you're clear. Unreported income is any income that you've earned, that you have, that you tripped over, that you came by, that does not show up on your tax return. If you are working a W-2 job, you have to report that income. If you received a 1099, you have to report that income. If you didn't receive a 1099, you have to report that income. If somebody gave you some money and it was not declared as a gift, you have to report that income. If you sold stock, you have to report that income. There is no income that goes unreported unless excluded by the code. So do not have unreported income, because I can certainly tell you that IRS is fully aware of all the transactions that we have going on, especially those people that thought they were operating those crypto wallets that IRS didn't have any knowledge about. They have all the knowledge. Report your income. That is the number one IRS trigger. Number 2, excessive expenses. Now let's be real. In order to make income, you have to have expenses, but you cannot justify having $50,000 worth of expenses and only $500 worth of income unless you are independently wealthy and you can show a pattern of growing your business. So you want to be very careful making sure that the expenses you have are tied to the pursuit of income, they are justifiable, and that they make sense. If you have excessive expenses, IRS is going to flag your return for an audit. They compare your tax return to other tax returns of people running similar businesses in similar geographical areas and similar zip codes. They track a lot of data, and they can flag your tax return very easily because it will stand out like a sore thumb. Cash transactions. In the day of money moving electronically, in the day of us being able just to tap our phones and pay for stuff, cash transactions are no longer the business, my friends. I know that cash is king, and I know that a lot of you still want to pay for things in cash. But when you have excessive cash transactions, excessive cash being deposited in your business, you know what IRS may be thinking? They may be wondering, are you in a legal business or an illegal business? Are you depositing big sums of cash in your checking account? It used to just be $9,999 worth of threshold. Not anymore. Every day, every bank establishes its threshold. Maybe today's Bank of America may be $4,999. Maybe Wells Fargo may be $2,999. They have flipped the script on us. And I am here to tell you, cash transactions will definitely trigger an audit. Whether it's right, wrong, or indifferent, ask yourself, do you want to flag an audit because you're doing cash transactions? Probably not. So make sure you are accounting for your cash properly. Avoid cash transactions if at all possible. Save yourself the headache, because if you're right or wrong, it's still a headache when you have to deal with an IRS audit. Number 4, foreign bank accounts. I don't know what this obsession is about wanting to have these foreign bank accounts. I want to have money in an account in Puerto Rico. I want to have money over here in the Cayman Islands. I don't know what your obsession is with that, but I am here to tell you that we as U.S. citizens, we are subject to income worldwide. And if we have foreign bank accounts, we have to report those foreign bank accounts. We have to do an FBAR reporting. And we also have to let IRS know that we have these foreign holdings. So when you have foreign bank accounts, rest assured, IRS is going to become aware of it. And if you're not doing the proper reporting on these foreign bank accounts, you are going to flag your tax return from an unnecessary audit. And if you were one of those people that was supposed to report that foreign bank account, there's a $10,000 penalty for failure to report. I don't think that that is a road that you want to walk down with Uncle Sam. So make sure that if you have foreign accounts, that you are properly reporting them. Make sure that you have foreign accounts for legitimate business reasons. If you have foreign accounts because you're trying to hide money, please do me a favor. Do not contact me. Do not follow me. Do not like, comment, or subscribe, because I am certainly not interested in any of that. Here's the thing, my friends. IRS audits are necessary. That is how our government generates revenue for our government, because our government works off a tax base. That is their income. So audits are just a normal course of business, but we don't need to be waving red flags and causing any attention to ourselves. So make sure you report all your income. Make sure that you don't have excess expenses. Make sure that you are reporting foreign bank accounts if you have foreign bank accounts. Make sure at the end of the day that you are following the rules and always doing the right thing. And when you know better, you have to do better, which is why I want you to like, comment, and subscribe so I can keep you updated on all tax, business, and wealth building information.